Hey, I'm Dan Fitzpatrick at Stock Market Mentor, and I want to look at Harte-Hanks here, HHS. You can see what's going on here, and it's tempting, and it certainly is natural to look at this and say, well, crap, I missed the move. And you look at the weekly chart, and it does look like it's run quite a ways. But as I look at this, I want to do two things. We'll talk about how to stay with this trend for longer. And then I also want to show you some things in this chart that, and I missed this. I didn't see it. There was, I've had too much information, I know. I had a total knee replacement a couple months ago, actually, and so I really wasn't at my desk very much, and so I wasn't running my typical scans. I didn't see this one. But I do have a scan that would have shown this if I had been looking. So it's kind of like woulda, coulda, shoulda. But let's just talk about this now. So this stock has come out of this volatility squeeze right here. It's actually two squeezes, a squeeze followed by another squeeze, and then this thing just exploded. Okay, you can see the kind of volume in this stock. Now, typically, like back here, didn't even trade 3,000 shares. Like here, I'll bet one of these days even less than that. Yeah, 1.7. This has been a very, very thinly traded stock, and then suddenly, you got your first inkling that something was going on back here, maybe even back there when volume ticked up quite a bit. But the stock really took off when it blasted through $9, and that was just, at the end of May. And since that time, things up over 30%. And so the question is, can this continue to run? My answer would be, yeah, I think it can. First of all, you got to give it a little room. If you're going to take this stock and you want to look, I got to take the 21-day moving average out. It's just distracting. So this is the 20-day moving average. You want to give it plenty of room, even say down to the 20-day moving average, which would be 15%, give or take. And you also want to look at volume. It'd be tough to buy this stock tomorrow with the stock, where it is right now. However, this is one way you could do it. You could, instead of just looking at the slope here, like all of this stuff, you look at the intraday lows. And what you're seeing is like, okay, this was an intraday low. Back here, a really low low, and then we get a higher one still, a higher one still, and another, and another, and another, and another, and another. So you got to look at this right here, the intraday low of 11, we'll call it 1150. That is the reference point for the power of the bears. In other words, each day that's gone on, the bears, the sellers, have become less powerful than the day before. Relative to the bulls. The bulls are just buying the stock. And anytime the stock comes down a bit, the bulls buy it. And so with each passing day, that intraday low is a statement of exactly just how far sellers will push that stock before all the supply is soaked up. And so one way that you can be trading this is actually pretty simple. You want to trade and rely on this pattern continuing of higher intraday lows. That tells you that the trend is still intact. If you get a lower intraday low, then that tells you that the dynamic has changed. It doesn't mean that the move is over. It just tells you that the dynamic has changed. And so you can be buying this stock here, and you keep your stop below 1147. Don't put it right on the money, but 1135 or something like that. Suddenly you're taking not very much risk in getting into a high momentum stock. So this is a trade I think could still work. Wished I'd caught it before. And the way I look at these is you look for these really tight Bollinger Bands close to a key moving average, and then you buy them on the high volume breakout. And you got that here, you got another one here, and even another one here. So there's so much to be learned from this chart, but I think there's also a lot of money to be made too. So anyway, that's all I got for you. Look, if you are not a member of Stock Market Mentor, you get a trial. Basically, I think it's $7 for the first 30 days. In fact, you know what? And if you don't like it, we'll give you your $7 back. So definitely check it out. This is the kind of market where you need some help. At least I think you do. And we're the people to do it, okay? I'll see you next time.